Hello and welcome to Additive Insight, the original additive manufacturing podcast, and your source for news, interviews and comment on the latest 3D printing and AM intelligence, brought to you by TCT Magazine. I'm your host, Sam Davis, and today I'm joined by Velo3D CEO Arun Jeldi. Jeldi is a serial entrepreneur currently running 4 different businesses. He took the reins at Velo3D at the beginning of 2025 after Arrayed Additive's acquisition of the company in a debt-for-equity exchange. Since then, Jeldi and his team have been working to revive Velo3D, expanding the company's business model to include a part production service, aiming for profitability by 2026, and listing the company on the Nasdaq stock exchange. Joining the Additive Insight podcast, Jeldi explains what motivated him to acquire Velo3D, why he felt it necessary to launch a parts production business, and why he was comfortable listing the company on the Nasdaq so soon. He also highlights the importance of ongoing materials qualification programs with DoD organisations, and provides insight on his plan to make Velo3D a century-old company. If you like what you hear, don't forget to subscribe wherever you get your podcasts. For more Additive Insight, head on over to tctmagazine.com, where you can subscribe to the print edition of TCT Magazine and our weekly Additive Insight newsletter for free. Arun, welcome to the Additive Insight podcast. We're going to come on to the Arrayed Additive acquisition and revival of Velo3D shortly, but first, can you start by telling us about your background and the background of Arrayed Additive?
My background is I come from a medical background. I practiced medicine for 3 years, and I felt like that's not for me, and I quit that. And I started my first startup with a bootstrap. I started a medical company, and I grew that company from investing about $10,000 to $50 million in 3.5 years, expanded that to nationwide. And I have diversified my portfolio as an investor in one of the manufacturing company because I always liked math and physics. And my background is very much geared into it. So I started that, and then a year after my investment got exhausted by this company CEO and could not deliver the results we expected. So I had to fire them, and I took over as a CEO of the company. And at the same time, we started 4 manufacturing companies, all bootstrapped. One in traditional manufacturing, second one is in additive, third one is mining and magnesium extraction, and fourth one is battery and energy. In traditional manufacturing with acquisitions and mergers, I took that company from a loss of $3 million to almost profitable by 30% in 1.5 years. That grew the revenue of $20 million. And then after that, Arrayed Additive, we went to Velo as a customer to buy a magnesium printing machine and do a joint venture of developing that machine. But Velo somehow fascinated me in their technology, and we spent the whole day from morning till evening understanding what it is. And I'm in love with that. And being an American company and American manufacturer, it felt like the right fit for me from the beginning. And then I went to other OEM like EOS and others to explore the same. But somehow, maybe it's the destination, like Velo went to a financial distress back in August, September time, and I started evaluating the company. Even though it's a very big investment to acquire a company, I felt like I am really interested in that, and that's how I invested in it and acquired the company back in 2024. And at the same time, I also ran a DoD a phase one process to extract magnesium, and I was successful at the same time and was able to generate revenue on that company. I did the same with energy side of it. So I ran 4 companies in 2.5 years, and all of them are revenue-making companies right now. And they're thriving really good. On a daily basis, I run about 3 companies on an average to make it progress, and Velo is one of them. I invest around 4 days in Velo, and rest of the 2 days and 3 days actually in the rest of my companies.
Okay, that's interesting. You mentioned there that the 4 companies that you run are all revenue making companies. Obviously, at the point at which you do the debt for equity swap to acquire Velo3D at the end of last year, start of this year, one of the main issues Velo3D has had is making money, right? So explain the thinking behind that deal. What opportunity did you see in acquiring Velo3D after most of last year was quite a difficult year for the company? So what was it that you saw in Velo3D that made you want to acquire the company?
So there are a few reasons why Velo is so attractive to me. One of the things is the technology itself. The technology is so robust in Velo, and any DoD and the whole world can actually vouch for Velo on technology side. And none of the companies have that kind of technology with low angle printing, and aerospace and defense quality of printing is very hard compared to others. And it's a high complex parts, high value parts that you can actually deliver on these machines. So we have multiple other OEMs which cannot deliver today what the DoD and other defense companies or space companies wants. So the classic example is SpaceX. Like SpaceX doesn't encourage any low-level technologies. I mean, if they went with Velo, that speaks volumes of how the Velo technology works. And the Velo technology was developed in conjunction with SpaceX back in 2018 as an investor, and then the initial bulk of machines was bought by Elon by developing a large bed-size printer within states to be in compliant with US regulations. So that is basically the starting point for me. Is like, you take a technology and you start a company like that who have invested $500 million to get here is not a small feat. And I have to appreciate Benny, whatever the structure is. He is a great engineer and a physicist who created this product. And I'm in constant contact with him. Benny, it's not that he's gone, but one of the things is the reason I saw to acquire mostly is because the business structure, running these companies and growing the companies, I can see a plan that can actually work. And coming from traditional manufacturing as a parts business, so one of my businesses is traditional manufacturing, which is a 100-year legacy of providing aerospace and defense parts to all the OEMs you can think of. Seeing that model and growing that model to a 30% profitable company, I see the same thing. It's a digital foundry, what it is as a Velo. Mm-hmm. We got the technology that can actually be leveraged to actually deploy any part of the world on demand, anytime, anywhere, right? So the traditional manufacturing does not have that flexibility. And this is the future, how you're going to make things. And this is what attracted me so much. And Arrayed Additive is already in that game, developing magnesium and aluminum products. So it felt like it's a very good synergy between those two companies. And that made me feel like I'm very confident that I can turn this around, this company into a profitable business and show the world. I mean, it's a start, right? Additive manufacturing ecosystem A lot of companies been existing for 30 years, and they have proven some concept. That's why they are existent for 30 years, right? They did not fail. But what the recent chaos about all these new companies is like they didn't understand the model of, most of the business you don't have to replicate or invent in a new way, most of them. A lot of people have done their work back in 20th century. What we actually follow the models, most of them, like even Google's, Apple's, and everyone, is what they have created as a benchmark of how to actually ramp up a business. I take lessons from the past quite a bit on industrial revolution and how it evolved. Additive manufacturing is in that arena where we need to learn from the past what the society needs and how digitalization in a manufacturing world works. It's nothing that difficult, but stick to the basics and make sure that by end of the day, what does the customer want? The customer wants really a good design part delivered faster than regular traditional manufacturing and cheaper than traditional regular manufacturing, right? So if you can solve those two problems, I think additive can be scaled. So that's where I see a real value of this. And to build that ecosystem and to get there, that's when I felt like this is a right acquisition for me without investing another 10 years in R&D. And I can actually continuously evolve this technology as we learn and collect a bunch of data from regular use of these machines on our floor, and also provide the service and the product the customer wants. So this is what we made a Velo, a good structure where we're going to stick to our guns and go to the areas where it adds value to the present manufacturing place.
Obviously, when you take control of the company at the start of the year, the aim is to turn Velo3D around, get it back on track. As you do that, what are the kind of priorities that you set in the kind of opening months? What are the very first things that you need to do to get Velo3D on the right track?
So let's start this note of whether it's a public or a private company. When an investor is involved, we have the basic responsibility to answer those investors and make sure that the business model and what we say is 100% honestly, it works or not. You need to evaluate that part. Because when I start anything, you have to foresee, you don't foresee a lot of ups and downs, but at the basic level, the business model is what dictates whether you're going to make revenue or whether you're going to, burn the cash. When I took the company, there are a lot of problems, right? Velo has, $18 million of accounts payable, and there are warrants that needs to be cleared. So there's huge liabilities on the company, and also there's no cash. These are the problems that first need to fix, even to start the business. So already we invested quite a bit of money to actually get that. And I'm not a institutional investor. I'm a guy who bootstrapped the companies and grew the companies. So there is a lot of risk and reward that goes with it. So step one is to fund the company to operationally be stable. So we funded the company with a debt of $15 million from one of our currently board of member, and he is a known person and investor back in the hometown of Indianapolis, where I live. So I was able to pitch him, and then he was convinced to do that, and that's how we put $15 million and $5 million, which is already existent debt from Arrayed Additive. So there's a $20 million what we bought in first. So that kickstarted our operations. The second part is to clear the warrants and other overhangs. So we did a debt exchange with warrant exchange with some equity issuance. So we cleared up the balance sheet, And then we also, like, because the business model have shifted now from just selling the machines to actually producing the parts, we require quite a bit of fleet of machines that can actually print those orders what we take upon. So we got back about 4 to 5 machines from the field. Velo has about 130 machines in the field, and we bought back by paying the money with a very low cost, and was able to equip the 5 machines on our floor. So that kickstarted this year with a very basic level of operations. And in 3 months, we were able to execute still 9 million revenue when the company didn't have anything back in 2024 to start with. It's almost 3 days away from bankruptcy. That's when I got the company through Arrayed Additive. So it's not easy when and the markets expect that I'm going to be a superhero just turning around the company. But the practicality of it is you need money, you need people, right? You need resources to execute at this level of execution when people are expecting 50-60 million in revenue just in the same year, when the company is almost has no business, almost no one is giving business at that time. It's tough to convince to the market saying that, hey, we will be stable, because everyone wants to see the positive results before they actually trust you, when they lost the trust back in 24. So we kickstarted that in 24, early in the first quarter, and then I continued few things. One of the things is operational efficiency. So the company had 300 or to 400 employees back in 23, 24, which now I only have 196 people. That's what I started with. So that's a good thing. I mean, we don't need those many people, actually. It's too much overhead. So the operational efficiency and leveraging every single person who works for us to the full extent of how we're going to deliver what we promise for the and give the guidance to the markets how we're going to do and deliver it. Mm-hmm. So reducing the cost and increasing the operational efficiency, and making sure that every system possible can be streamlined to reduce the error rate is the key. So that's, and also budgeting efficiently before you start by factoring in all the factors you can imagine by taking some time. The first thing I did is to budget, like really how much it costs to actually deliver these results, and how we can sufficiently fund the company, and on the financial aspect of it. And then we went to the operational efficiency by grouping the teams and giving some robust Kaizen practices, which made these possible to actually elaborate all the loopholes which we can miss, or the blind spots which we can miss. And having that strategy in the first 90 days helped us to clarify whether it's a right business model or not, whether we're going to make money or not. First things first, right? So that's what we did in first quarter, and then that rolled up to the second quarter. It's only like, it seems like 7 years, but it's only like 7 to 8 months actually I took over. And it's a big lift from delisted company to back in a national exchange, doing all the things what we have done parallelly. It's like we're keeping the momentum going. We are making deals. We're also uplisting the company to add value to the investors, and raising the capital to make sure that we actually survive to thrive in 26. So these are the things what we have done to make sure that the operational efficiency is there.
Yeah, you mentioned the launch of rapid production solutions there, and that has probably been the biggest development in terms of offering and portfolio since Arrayed Additive came into the Velo3D business. That obviously represented a expansion of the business model. Can you explain the thinking behind that? Why, obviously, until this year, Velo3D has been a very straight machine sales business, and now it's also doing part sales. So what was the thinking behind that offering?
So, as I mentioned earlier, you have to see the demand in the market and the customer. What does actually the customer need, right? And how my solution can actually solve their problem. This is a basic question every business have to ask, and it has to be a very legit question. Is like whether my solution is the right solution for the customer, and is it efficient? Is it timely and also economically makes sense? So if it makes sense, that's the model you want to go, and it has to scale and it has to be repeated. So a recurrent revenue is the key for a business to thrive. Just like Microsoft, a subscription model, it seems very, very small, but when you add the volume of it, it becomes a billion-dollar company, right? So imagine every aircraft, every missile, everything in a defense world requires spare parts. And every airplane that flies in semiconductors, you require parts. So all these ecosystem are the areas where we actually serving. The main end product is a part. It's not the machine or the tool. They don't care. They really don't care. The customer doesn't really care how it's done. They want the part, and they want a part that actually works in their product. So you can, one of the things you have to be very cautious about is Velo is not a cheap machine. I mean, it costs anywhere between 1.5 of a small bed size to $4.5 million. And when you actually see these economics and look at this and say how to actually develop this to a scale, and it's very hard. Because just to buy a machine at millions of dollars and keep it on the floor and juggle with it, and then after a year you get a part, for me it's a dead business. Any printer, right? Like if you had to take the printer and you had to wait for a year, and then you don't even know, you can put out a part on it, and then you will be you get the most expensive part, but it's still it can't scale immediately because you need to still go. So you're putting the money and burning it before you see it, right? It's more of an R&D stuff than actually a scale immediately. So I felt like it's a huge barrier of entry for any customer. And it doesn't make any sense for me. If I am in their shoes, why would I do that? I would not do that, right? I will find the fastest solution for me and go with it. So what we felt is okay, how can we reduce the barrier of entry? And the barrier of entry is how should we do that is, why don't we just print a part and show them that your part works? Then you buy the machines and scale it. That's it. So that's how, and one of the reasons is all these companies are actually doing it, but they're not actually charging or getting the money out of it. The amount of resources you put to make this customer successful on a company side is so vast. Imagine this, the customer comes with a concept of design, who he doesn't even know that, okay, if this works or not, because you're changing the design. It's not a traditional model and you want to test it. So they come to you, they go in several reiterations of design, and then finally say, oh, this actually works better, so can you print this? And then it takes about 6 to 9 months, and they spend about a couple of $1 million, and then you get a part. And then they go test it, there are some flaws, and then you go and then come back. And so it takes about 3 years, just like developing or sending a spacecraft takes 10 years to do the research and send everything. So it's quite a bit of investment. So what we did is we have Velo has a tremendous application engineers and engineering skills that have developed over a period of time that can be utilized to actually prove the concepts pretty fast when we have the machines on the floor. So that's where the rapid production system solutions came, where we want to show the customer the value first before we ask for a bigger chunk of investment in this technology.
That makes sense.
Yeah.
Other notable developments this year, I think just this summer alone, Velo has entered an R&D partnership with two NAVA federal labs, announced it is qualifying niobium and titanium powders from Amero. There's a copper nickel alloy being developed for the US Navy or qualified for the US Navy, and aluminium CP1 for the US Army. All of these are relating to the development or qualification of new materials on the Sapphire line of printers. How significant are these programs for what Velo3D is trying to achieve?
So these are very, very highly interesting subjects for DoD and national security itself, because if you see our countries which are enemy countries of ours, they are rapidly increasing their fleets and production side. But US is lagging quite a bit on the manufacturing side because we don't have the ecosystem. We neglected that ecosystem for quite a long time, and that is catching up with us. So that's why all these defense programs and space programs have been rapidly increasing their production lines, and they're finding ways which can beat the Chinese manufacturing production because we do not have the feedstock. We don't mine. We actually import quite a bit. And China actually does 90-95% in-house everything. And that's a huge advantage which US is missing on the mining side of it and the feedstock of it. And we'll be in very, very critical position when something goes wrong with these relationships. And the other part is like the technology itself. They can replicate anything. It doesn't mean that they're actually indigenously developing everything, but if they see an opportunity to actually get the technology out from anything, anywhere in the world, they can replicate in few days and months. So, which is very, very dangerous to sustain when US has an indigenous development of a lot of technology which we develop on the manufacturing and rocket or defense or aerospace level programs. So the reason for these programs is the urgency in meeting those standards and getting ready for if there is something goes on at a war level. And Ukraine war, right, is one of the example, and Israel war is another example, and China threat to Taiwan and others. So we are in these key sectors like aerospace defense and space occupancy, and then also in semiconductor market for a reason. Velo is focusing on high-end, high-level parts and adding a lot of value on the national security side. So these are the ramp-ups that we are very confident that Velo is sustainable for decades to come. And early on involvement, what makes in aerospace and defense is the first articles. Once you set the first articles on certain platforms, that is the key. And once it sustains, it just becomes, so you're starting at one program and it goes to 10 programs. You now running hundreds of machines to print these things every single day, and you're making money every single hour and minute, 24/7. And the company is so profitable in 2 to 3 years. So this is how we envision, and this is working perfect, because one of the greatest things is if you run in automotive and any other parts in US, it's so penny pinching. Like you struggle with the margins. But in aerospace and defense world, it's low volume, high value parts, and it's complex parts that none can actually do it. And this is where our focus is. We do not want to deviate for low level, cheap products, which can be done by China. You don't need to involve. US has a standard, Velo has a standard. We are focusing on high level things, not going for any cheap product. And the additive actually suits for that, because if you see the powers, right? So you talked about niobium. 1 kg of niobium costs like $2,700, 1 kg. And if you want to use the hypersonics, each part is $1 million cost, right? You're printing the whole thing. So that's why Amiro, as a Australian mining, and powers company, it felt like it's a right collaboration with them, and we made a multi-year contract with them to supply the feedstock. I always believe that the cost of the feedstock and the materials and the labor decides how much financially you are viable as a company. So that basically triggered these developments on the titanium. Titanium is a hot topic in so many applications in defense world, and same as niobium for the hypersonics and other what we are trying to achieve. And we have already kind of done GR-COP. We have aluminum, steels, and any alloy you can imagine Velo is printing today. So making these continuous collaborations with the power companies and locking those contracts for years secures the material side of it, and also having this engineering skill set within the company and continuous R&D to automate these systems to reduce the cost of each part is the key for thriving business. So we're constantly working on both ends, and that's how we got involved in all these factors.
In recent weeks, as we record this, Velo3D is listed on the Nasdaq stock exchange. It's previously been listed on the New York Stock Exchange and the OTCQX best market. What was the thinking behind that move, and why is now the right time for Velo to make that move onto the Nasdaq?
So the market cap Velo has initially, when we took over, it's not even a public level of market caps, 200, 300 million, and it should not be in public markets at all. Like, the company should be at least $1 billion plus to sustain the public markets. And we had a really profound thought on that. But Velo is a growing business, which is a technology that the public want to see how it evolves, right? And we want to give an opportunity to the investors too. So it went on a SPAC into NYSE. Any SPAC company you see, none of them is existent for a reason, because they're not ready for public, but because of a loophole as a SPAC, they go, which is, for me, is not a right approach, is because why you want to waste your money and time when you're not ready because you just want to raise capital to burn is not the way to do it, right? And my thinking is, okay, the investors lost money, right, doing this in the past, and they raised millions, like hundreds of millions of dollars. And when we took over, it was trading as in pink sheets, like it's the lowest level of a public market. The stock has no value almost, right? Even though the market caps are high, the stock is almost like in pink sheets, like the discounted is very, very low. The first step is to, okay, let's get to the level where there is more exposure to the investors. So that's how we got into OTCQX by complying or getting compliant. So the company couldn't file the Q3 filings, and it got delayed and became non-compliant. And there are a lot of problems when I took it. So then we got compliant and we got it to OTCQX. And what I felt is like, we're doing all this work, and the exposure to the investors to actually invest in the company will not be possible if it's not traded in national exchanges. So that was the first reason, because when the company and the confidence is so high, and then we know that we can actually deliver with this model, and I can convince the investors that this can happen. That's the push to be exposed to the national markets and have more visibility and more analysis on what we are doing. Having that analyst gives more value to the stock who holds it. I always believe in giving value to the customer and investors because I feel like it's not about me, even though I'm the majority shareholder of the company even today. I have a responsibility to answer the investor when I take their money, whoever it is, right? So I work for them. That's how it is. And I want to make sure that we gain that confidence and we thrive as a company so we can gain more traction in investments and get to the next level. And so we started slow. We're not burning the cash. We just want to make sure that we have a product to sell and we know how to sell it. So we want to retain as much cash as we can, reduce the cost. Go like a bootstrap company, right? Like I have that experience where we don't have money, but we have to thrive and get to the next level. So this is the same attitude I'm applying to Velo3D, reducing the cost as much as we can and retaining our resources to thrive to the next level. So in that sense, we want to get that exposure to Velo as a publicly traded company, and I pushed for Nasdaq. Normally, it's a 6 to 8 month process. We were able to do in 1.5 months, and that's how it's listed in Nasdaq within the same year when we took as a pink sheets, which is nothing, like to Nasdaq. And it only happened because we were able to raise capital, and it's oversubscribed than what we are initially offered. I mean, it's almost 30% oversubscribed than what we offered. So that means that investors have confidence that what they have seen in the last 7 months, they love it. That's how we make, and we reduced quarter after quarter our losses and got into a position where we'll be positive in 2026. We're a profitable company in 2026. That's the pathway. That's why the investors believed in us, and we were able to get into Nasdaq.
Finally, Arun, and thank you for taking the time today. You've touched on it a few times throughout the conversation today, but your plan for the company is to make Velo3D a century-old company, to ensure that it sticks around for decades, if not centuries. What will it take to make that a reality?
So Velo, if you see this technology and parts business and making the components to make a bigger product is on its way. Okay, to thrive to the next level, you first learn how to make one by one each part, and then to the product, and next to the product to the OEM level, where we can actually get to the real off-shelf things for a lot of the companies. And that product becomes sub-assemblies to a full assembly of probably a missile, a rocket. Anything can be created when you know how to do it in-house with all these engineers and have an ecosystem where you can build anything. It's just like Ford, right? Ford started as cars, but they built bombers back in the Second World War every single hour. Imagine Velo can do that with right components and with some collaborations and downstream of things. We can create products like that very rapidly, faster than anybody, because we got the fleet to do so. And none of the OEMs can do it. If you go to a rocket company, they're focused on building a rocket, but do they have all? They just get all the pieces from different parts of the world and put together. No rocket company has all the manufacturing in-house, right? But Velo can actually build that because we have manufacturing stream of things that we have built to create those. So that's where I feel confident that we will evolve to the company that is bigger than just a parts manufacturer. That's the vision for 2050, and Velo will be able to move it with acquisitions, mergers, securing the feedstock at the mining level, and the economics of it makes sense for us to grow to the next level. And my vision continues to evolve as we progress in this journey, and that's how I'm very confident it's going to be a century-old company. Why I say that if I own a century-old company on a parts business, and I know like how the aerospace and defense, once you lock in the technology and once you know how to do this, those are repeated orders to current income forever and ever and ever. You just have to add on more and more parts to that. That becomes more and more profitable. At one point, you have so much cash, with this. It's unbelievable.